many cases, there are people who are either diaspora, Sri Lankan diaspora, or just non-Sri Lankans who've invested in Sri Lanka. There are three very recurring types of investments and three instances where many of our clients need our help and advice to navigate the murky waters of Forex regulations in Sri Lanka, which I must say have been extremely inconsistent and changing rapidly over the last 5 to 10 years. The first type are the clients who have invested in property in Sri Lanka already. They might be non-Sri Lankans or quite often diaspora with foreign passports. And many of these have not invested into their property, whether it's a villa or a beachfront property or an apartment. They haven't managed to bring in their funds through the official channels. That is typically through the central bank, where it's declared, and then it comes through paying taxes if and when the investor decides to leave. So this can be very complicated, and I think Hoshin and Nirwa, they will be touching on this. The second type falls into the bracket where people who have very little or even no connection with Sri Lanka have inherited property in Sri Lanka. So this could be first or second generation Sri Lankans living in Australia or the UK who've inherited property, and they want to know how they could sell it and repatriate money back to their country of residence. The third one, of course, is outward migration. Sri Lanka has witnessed a lot of outward migration over the last 3 or 4 years. And here people want to know how much money they can take out, what they can do when they sell their property in Colombo or elsewhere. Can they take all that money out? And how can that be done in a legal way? So these are just 3 examples. There are many more, and we have actually compiled our report. It's available online. It's for individuals, it's for companies, and I think some of the findings that we have stumbled upon are also very relevant for policymakers. So I think you will probably get a promo code at the end of this session where you can go onto our website and get a copy of our report. Right, enough from me. I'm going to hand this over to Hoshin. Just before I go, just to let you know, the format of today's session will be Hoshin's going to give you an introduction on the overall global migration in the world, in Asia, and in Sri Lanka. This will be followed by Nirwad's presentation on Forex regulations that are very specific to Sri Lanka and many of the regulations and the landscape on what you need to know if you're moving in or out of Sri Lanka. And part 3, we will invite you to send your questions across, and then the team will try their best to reply. I must also add that you're welcome to drop a mail to us at info@rn.com if you have any specific queries, which we will endeavor to try and answer by email afterwards. Right, so thank you again to everyone who's joined and who's listening in. I will hand it over to Hoshin. Thank you.
Thank you, Mr. Madhavala, for those kind introductory words. So I'm Hoshin Ranmini here. And as Mr. Madhavala correctly stated, we have recently completed this report on migration, impact of diaspora, and the Forex, updated Forex regulations. So now we will be sending the link to the website. If you are interested, you can go check it out. And also at the end of this session, as mentioned, we'll be sharing the promo voucher as well. And one more thing, if you have any questions during this session, we encourage you to drop a text via the chat so that we can come back to them at the end of the session. So having said that, let's go to the presentation. So what we are diving today is not just an academic topic, it's actually a real world puzzle that affects how Sri Lankan survives, grows, and connects with the world. So here we will be talking about the movement of people, which is the migration, and also how the money move, which is investment and foreign exchange. So there is the diaspora, who is our extended Sri Lankan family who is living abroad. So actually, all these are interconnected. It shapes our economy, our society, and also the political stability as well. So whether you are a policymaker, a diplomat, a student, or an investor, or just someone who is curious about where we are headed, I promise this session would matter. So to kick things off, let's start by understanding what's happening globally in regards of migration, where people are heading and why. Yeah. So this slide actually paints the big picture. And as of mid-2025, the global stock of international migrants reached approximately around 304 million. And this represents about 3.8% of the global population. And this figure has been rapidly increasing over the last few decades. And migration is now a defining feature in the world globalization as well. And for many countries, this is a structural necessity rather than a simple choice, right? And one another factor here that we can see is the gender distribution. So female migrants make up around 48% of the total international migrants. However, this proportion varies across regionally. For an example, if we take Asia, Asia has the lowest share of female migrants, around 42%. So this more or less reflect that male-dominated labor flows in Asia, particularly towards Gulf countries. In contrast, Europe leads at 52% of female migrants, driven largely by family reunifications and care-related migration. So let's move on to the next slide. What is most interesting to see is migration dynamics differ between the emerging market and the developed world. So as you can see in here, in high income countries, migration is now the one of the most, and we can also say the only driver of population growth due to their low birth rates and also the aging populations. However, when it comes to low income and lower middle income countries, including Sri Lanka, population growth is still driven by the excess births over deaths. But unfortunately, we see for Sri Lanka, the economic pressures of the country, more people are driving away from the country. So if we look at the specific country statistics, we can see in here, Pakistan's net migrant flow is minus 16.5 million, India minus 3.5 million, Bangladesh minus 2.9 million, and Sri Lanka minus 1 million. So these are actually, primarily temporary labor migrants, mostly headed to the Gulf and the Southeast Asia. And meanwhile, the countries like Syria, maybe Venezuela, and also Myanmar, their migration is driven mostly by the conflicts in the country or the insecurity and also the failures in the states as well. However, by 2050s, we are projected to see over 400 million migrants worldwide, suggesting that migration will remain one of the most important global economic and demographic forces in the coming decades. Let's move on. So this slide actually explores the relationship between the net migration and the level of Human Development Indicator scores. So the graphs show that countries with very high Human Development Index, the HDI scores, they are experiencing increasing net positive migration over the time, meaning more people are entering to their countries than leaving. So this trend is actually logical. Nations with higher human development indicators such as Canada, Germany, and Australia, they offer better healthcare, education, governance, safety, and also a lot of other economic opportunities as well. So they attract migrants both through formal skilled migration programs and also through the humanitarian channels as well. So on the other hand, the countries with lower HDI, the Human Development Indicator scores, they tend to experience net emigration, which means more people are leaving their country than coming into their countries. So Sri Lanka stands in that point. And as you can see in the graph also, especially after 2000s, Sri Lanka has seen a constant negative net migration. More people are leaving out of the country than people returning back to country. However, this trend has fluctuated over the years, but the general trend, what we can see is outward migration, especially driven by economic issues such as, let's say, inflation, political instability, unemployment, etc. So in 2024, the net migration figure in Sri Lanka stood at a point as minus 27,245, according to the World Bank data. So it is also important to understand that migration isn't just about volume. It is also about who leaves. Sri Lanka actually has been particularly affected by outflow of skilled professionals. According to the World Bank, Sri Lanka loses around 25% to 30% of its university graduates to migration within 5 years after graduation. So the cost to the economy also we have to think about on that regard. So let's move on to the next one. So this actually zooms in on migration within the Asia Pacific region, which is a powerhouse both demographically and also in terms of migration flows. So the key message here is that Asia Pacific is home to around 58% of the world's population and also the origin of over 108 million international migrants, that is accounting to roughly 40% of global migrants. So unlike conventional assumption that most migrants from Asia move to Europe or North America, the data actually tells a different story. The majority, I mean about 70% of that, of Asia Pacific migrants actually move within the region itself, particularly within the sub-regions or to other global south countries. This actually is a form of, we can call this as south-south migration as well. And this is now has been recognized by the International Organization for Migration as the largest migration corridor globally. And one of the most important importance of these corridors is from South and Southwest Asia to the Middle East. South and Southwest Asia to the Middle East. So countries like Sri Lanka, Bangladesh, Nepal, and Pakistan provide millions of workers to Gulf Cooperation Council countries like Saudi Arabia, UAE, the United Arab Emirates, Qatar, and countries like Kuwait as well. So this corridor is driven mainly by the labor shortages in this Gulf region and also the availability of surplus low and mid-skilled labor in the South Asian region. The patterns that we can identify in here is these people are temporary labor migrants and they are not long-term settlers, and they go mainly for the remittances, and the citizenships and permanent residencies are not of their most priorities. They most often go because of the remittances that they can remit back to the countries. However, in these groups, there are small concerns that we have come across. I mean, we have all seen about how vulnerable they become because of the limited legal protections, especially in domestic and construction workers. So when it comes to Sri Lanka, it actually fits squarely into this picture. It is a significant labor sending country, especially to the Middle East. But we can see now there are some emerging destinations like South Korea, Romania, Japan, and Israel, which have been very important to Sri Lanka. So moving on, I would briefly touch on some of the key types of migration that we can see in Sri Lanka. So internal migration, as we know, this is from movement within the country, from rural areas to urban areas, such as people coming from rural areas to Colombo, to the Western province, and then the regular international labor migration. And in 2024, Sri Lanka has sent over 300,000 registered migrants to other countries. And another type of migration is this irregular migration, and this is one of the growing concerns across the world and in Sri Lanka as well, because these migrants are misusing their tourist visas to seek work, especially in countries like Oman, UAE, and also in countries like Malaysia. So these things can actually lead to, trafficking situations or having bad experiences, because in 2024, the government has rescued more than 2,500 people facing such situations, who have gone from tourist visas and have been stuck on those countries. And likewise, we can see some other types of migration, such as return migration, student and skilled migration, and also permanent migration. So I'm not going to go deep on this regard. So let's move on to Sri Lankan context, the trends in Sri Lanka. So we'll start from discussing the total departures in Sri Lanka. So here we can see a comparison of Sri Lankan departures between the fourth quarter of 2024 and also the fourth quarter of 2023. So this is actually based on the official data from Sri Lanka Bureau of Foreign Employment and also the Immigration and Emigration Department. The key observation here is that the total monthly departures in quarter 4 of 2024 has exceeded those in the same quarter of 2023. So, but if we go deeper, within those numbers, there is a decline in the proportion of the departures that were classified as migrant workers. So this can say a lot of things about this broadening of outbound mobility. We can assume, or we can say that people have been leaving for non-labor reasons, or for such reasons such as study, tourism, family reunion, or permanent relocation, etc. Sorry. So another possible factor that result in this regard can be the change in the recruitment demand from traditional destinations to emerging destinations. As I mentioned earlier as well, the Saudi Arabia and Qatar, they have started to change their recruitment, because they have actually started to automate the low skilled jobs, reducing the demand for migrant labor. But if we take countries like Japan and Romania, they are increasing their intake of skilled workers through bilateral agreements. So overall, Sri Lanka is not only exporting workers, it's exporting its future citizens as well. So that's both an opportunity and also a challenge, which we need to find the right balance. So talking about the demographics of these migrant workers, we can see the age and the skill characteristics of these workers. So looking at this bar graph, the larger share of male migrant workers fall in the 25 to 29 and also 30 to 34 age groups. So these are the prime working years of these people, and often after completion of a basic degree or basic education or a vocational training qualification, or maybe early work experience as well. So men in this age bracket actually seek employment in categories like the construction, transport, industrial services, etc., especially in the Middle East, East Asia, and Eastern Europe countries. When it comes to the female workers, the pattern is relatively bit different because the larger share of these migrant workers falls between the age of 40 to 44. So many women actually delay migration until their children are older or after fulfilling domestic caregiving responsibilities. So when it comes to the skill categories, we can see both male and female foreign employment is now concentrated in the skilled category. According to the Bureau of Foreign Employment, over 60% of the registered migrant workers in 2024 actually were classified as skilled migrants. So this included electricians, plumbers, caregivers, machine operators, nurses, etc. So this indicates a shift in migration dynamics. A decade ago, Sri Lankan migration was dominated by low-skilled and domestic labor, but recent effort by the Ministry of Labor and foreign employment, including giving language trainings, giving technical and vocational education, and having bilateral labor agreements, all these initiatives have resulted to cater to a high-skilled labor outflow. So let's move on to see where our workers are going. So Kuwait has remained on the top, receiving more than 70,000 workers in 2024. So actually, this is not surprising because Kuwait has long been a major employer of domestic and semi-skilled South Asian labor, and Sri Lanka has bilateral agreements in place to support this flow as well. So in second place, we have the United Arab Emirates with nearly 50,000 workers departing to these countries. And the UAE attracts Sri Lankans for the jobs in construction, logistics, hospitality, domestic work, especially in cities like Dubai and Abu Dhabi. So as mentioned before, apart from these traditional destinations, we also see the rise of non-traditional destinations, such as we can see Romania. They have received around 10,000 Sri Lankan workers in 2024, and we can see Israel is also gaining traction. We have sent around 10,000 people there, and also similar interest is now emerging in Japan and South Korea. So moving on to the next, one of the mostly discussed areas in the in Sri Lankan context as well, the remittances inflow. So the remittances inflow actually shows a crucial recovery signal as well. Because at first glance, you can see in this graph, it suggests a steady upward trend across the months, pointing towards a return to financial stability, one would say, especially after seeing a massive drop during 2022 economic crisis. So few patterns stand out in here. We can see the monthly inflows appear higher across all quarters compared to 2023, suggesting restored confidence in formal channels. And also there is significant spikes in remittances around March and December. So this can align with the celebratory, the New Year and Sinhala and Tamil New Year and the Christmas season, when the diaspora communities traditionally send more money to their homes. So this trajectory reflects not just recovery, but also resilience. Sri Lankan migrants abroad are continuing to support families back home, despite rising living costs globally and geopolitical uncertainties. So this graph is not just about money, it is a graph about people. At the heart of this is Sri Lankan diaspora. So the diaspora, especially those in Gulf countries, Europe, Canada, South Korea, and Australia, they have historically formed the lifeline of Sri Lankan foreign exchange earnings. They send money to cover food, school fees, hospital bills, and increasingly to invest in property and also in small businesses. So let's put it in context. Remittances in 2024 reached around 6 billion USDs, surpassing even earnings from garments, tea, or tourism. So the remittances received from diaspora helped to stabilize the balance of payments and provided liquidity to settle critical imports as well. So post crisis, we can say that formal remittances have rebounded. The formal remittances, they have rebounded and they have helped by having better exchange rates, fintech platforms like Lanka Remit, and also reduction in the black market premium. So these are the trends that we can see in terms of the remittances. Now we have almost covered the first part of this session, which is the overview of the migration globally in Asia and also in Sri Lanka. Now we are coming to the most important part of this webinar, which is to walk you all through the updated Forex regulation. For that, I kindly invite my colleague Nirvadhyana Likshani to continue. Thank you so much.
I hope you all have got an idea, overview about the global migration and where we are heading and what's happening all around the world. So I'm Nirikshani Mendis, and I'm going to explain or give you a brief idea about the Forex regulations. But before that, I would like to walk you through the idea of remittances. So remittances, it's about the lifeblood of many Sri Lankan households and honestly, the economy itself. So I would like to share some eye openers before I get into my session. So do you know that in 2020, we have lost billions in Forex amid the economic crisis? We have lost at least USD 3 billion due to the reason of surpassing the official banking channels. So it means informal remittance are the ones. So on the pressure on exchange rate and the forex reserves is also considerable in this regard. Informal channels, it always reduces the inflows to the forex reserves and it contributes to the currency depreciation. So during 2022, the Sri Lankan rupee depreciated nearly 80% in early 2022. Further, this impacts on the monetary policy and the banking stability too. Why? Because it causes the liquidity shortages and it clearly hampers the essential imports. Plus, the growth of the black market and the illicit flows is also something which is unavoidable in this regard. So, what has happened? As the government response, the CBSL, they have introduced incentives and they have expanded their ties with the licensed money transfer operators during 2022. So then we can see when it comes to the formal versus informal remittance infrastructure, first we have to see how do we get the money. There are two main channels. One thing is formal and the other one is the informal. So what do you mean by formal here? It's about the banks, Western Union, and the other online platforms. So every time these are traceable, taxable, and it always compliant with the anti-money laundering system or the rules, or else we call it simply AML. And these are the things which are also preferred by the diaspora investors. On the other side, we have got the informal channels, like we say Hawala or the Undial method. These are widely used because they are cheap, fast, and often more trusted in the rural areas. Why? Because people who live in the rural areas are having lack of awareness about the formal remittance infrastructure. And the problem is they are also untraceable, untaxed, and it's totally outside the formal system. That's the main problem for national accounting and the currency stability. So think of this way. If most people send money through the unofficial means, the government can't measure inflows. They cannot track this. They can't tax it. Worst of all, we can't stabilize the economy using those funds. That's why moving the remittances towards the formal channels is vital, right? So with that, we are going to check the impact of the formal remittances. Give me a second. Okay, so let's dive deeper into what the formal remittances actually achieve. First, it can help us to achieve the economic stability. During the financial crisis, like in 2022, as Hoshin has mentioned, we have got around 7 billion USD in legal remittances. It was such a lifeline. We were able to help the families to buy the essentials, to pay their rent, and to stay afloat. Second, the financial inclusion. When the remittances come through the banks, it encourages families to open accounts, save money, and here they can invest. Maybe they can even buy the insurance or start the small business. That's how healthy economy grows from the bottom up. Thirdly, the tax revenue. Every dollar that goes through a formal channel, it can be recorded, it can be traced, and it can be taxed. That revenue goes into roads, school, public transport, hospitals, infrastructure, and the public goods. So even if it is small amount per transaction, it adds up in a big way. Long story short, the more we formalize these flows, the more secure and prosperous our economy becomes. And that's good for everyone. Next thing is we are going to check the impact of the informal remittances in Sri Lanka. Now, let's flip the coin and see what happens when the remittances flow through the informal channels like the Hawala, Undial, or the cash couriers. First of all, there is a big loss of tax revenue. You all understand that part. When the government can't see the money, it's something that we can't tax. That money we could have spent on hospitals, road, or the education. But when we do like it in the informal remittances, it's gone. Then there is whole issue of economic informality. If a larger portion of our economy is built on money that's basically invisible, it becomes extremely hard for policymakers to plan or regulate anything properly. It skews the real picture of the economy. Next is the big one, money laundering risk. Informal channels are playground for illicit flows, whether it's for criminal activities, terrorist financing, or just plain tax evasion. That can bring major international scrutiny, even the sanctions to the country. And let's not forget that the families who rely on these methods, they are exposed to fraud, delays, and zero legal protection. If the money disappears, there is no one to complain. And it's a gambler. And it's a dangerous one. So here, we should understand before we come to the Forex, why Forex rules matter. It's not about creating red tape for the sake of it. These rules are essential to protect Sri Lanka's economy, especially during the grappling time or the crisis. They ensure that the money coming into and going out of the country is totally tracked, transparent, and legal. Think of it like the traffic rules for the money. Without them, you would have chaos, unpredictable exchange rates, currency shortages, and even the risk of economic collapse. For the exporters, the Forex rules, these rules help to stabilize the value of the rupee. For migrants, they ensure your remittances are safe and legal. For the investors, they build trust in the financial system. So moving on, first we should understand who are remitters or the difference between the residents versus non-resident remitters. So this is really important because the rule changes depending on whether you are considered a resident or non-resident. Simply, let's say that you are living 183 days, more than 183 days in a year in Sri Lanka, then you are a resident. That means more restrictions for you because your economic activities directly impact the local market. But let's say that you are living abroad more than 183 days, then you are, let's say you are a Sri Lankan expat. For example, you are classified as a non-resident. You get a bit more flexibility when it comes to moving money in and out. Why? Because the system wants to attract foreign capital and make it easier for the diaspora to invest back home. So this classification affects things like the account types. For example, personal foreign currency accounts, or as we call it as PFCA, or a capital transaction rupee account, CTRA. I will be explaining these things in a later point. It also affects how much you can remain and what kind of taxes you have to face. So understanding your status is step one in managing your money across the borders. Right? So then we are coming to the Sri Lanka's Forex law and its recent updates. So imagine this is a quick crash course on the law behind all of this. So in 2017, Sri Lanka has introduced the Foreign Exchange Act number 12, replacing a restrictive order law. So why did they do this? They wanted to liberalize the economy, meaning fewer barriers for doing the international business, sending money abroad or attracting the foreign investment. But things changed when the economy ran into trouble. In 2021 and 2024, the government started to tighten the things again. Not to go backwards, but to stop bleeding of foreign currency and stabilize the reserves. So these changes, it don't just happen randomly. They are announced officially through the gazettes, directives, and the orders. So let's say that if you are in business, finance, or in migration, knowing how to read these updates is crucial. How you stay compliant and to avoid the penalties or the sanctions which comes on your way. New rules for the exporters. So when it comes to the exporters, there are three main key rules you now have to follow under the 2024 foreign exchange regulations. First one is, we call it as the repatriation rule. Let's say that you are exporting goods or services or the money you earn, whether in USD or Euro or the Japanese yen. It must come back into Sri Lanka within 180 days of shipment or the service delivery. No exceptions in that regard. And then the proof of receipt. Once you receive the money, you have got to show proof. That means you may have a bank statement, you may have an invoice or a transfer confirmation. So all submitted or should be submitted to your licensed local bank. And then the currency conversion. Let's say that you have kept some money for the business costs, salaries of foreign workers, or the loan repayments, and etc. Any leftover foreign currency, it must be converted to Sri Lankan rupees. And you have got a deadline for this by the 10th day after the 3 months of receiving the funds. I will be repeating that. When it comes to currency conversion, so let's say that you have paid all of your approved expenses, as I have mentioned, business costs, salaries of foreign workers, and the loan repayments. Any leftover foreign currency, it must be converted to the Sri Lankan rupees. And you have a deadline for this by the 10th day after 3 months of receiving the funds. So the whole idea is to stop people from holding the dollars on their hand. It's all about improving the currency liquidity. That will help to keep the rupee from keep falling. And for the indirect exporters and the bank monitoring also, we can see that they are also how to follow the same rules. Let's say that you are a supplier to the exporters and you get paid in foreign currency. Let's say that you are providing the packaging to them, logistic or the IT support. You also have to play by the same rules. That means any leftover foreign currency you receive after covering the approved expenses, it also must be converted into rupees. And it doesn't end there. Your licensed commercial banks also has a big role to play here. They are responsible to tracking whether you have received your export money within the 180-day window. And they have to ensure that you have converted any leftover foreign currency on time. They have to keep the proper records for the documentation. And here, banks also have to report everything to the central bank. They are having a portal for that, which is called Export Proceed Monitoring System, or as we call it as EPMS. So this is not just a guideline, it's being tracked digitally. And if you don't follow the rules, what will happen? The authorities can step into your business. They can force the conversion of your foreign earnings. and there could be the other penalties. So the message is very simple. Whether you are a direct exporter or an indirect exporter, the same compliance framework applies, right? So then we are coming to the migration allowance. Now it's already capped, or I will be speaking about the outward remittances or the migration allowance. This one is a big deal for the people who are planning to leave Sri Lanka permanently or who have already left the country. So if you're emigrating, maybe for work, maybe for the study, or to simply start your life abroad, your initial migration allowance is capped USD 100,000. That's the maximum you can legally transfer out of the country when you move. This is very important because this is a very stricter rule than before. Previously, there was a lot more flexibility in this regard, and migrants could take large sums of money with them abroad. Especially, let's say that they have sold out their property or the business, they were winding up their business. So that was easier for them before, but now it's been strict. But with the economic stress that Sri Lanka has faced, the government is now tightening the capital outflows. The main goal is to stop much money from leaving the country at once and to protect our foreign reserves. So if you are migrating, please plan ahead, know your limit, and make sure you are transferring much money through the official banking system with all right documentation, visas, job letters, or the admission letters in place. But still, there are some certain suspension of the outward investment. So this is a kind of a critical shift, I can say. Sri Lankans can no longer freely invest abroad like before that they have done. So we had the outward investment account, or as OIA, that is the mechanism residents and the companies they have used to send money out for investment. Now it's suspended except for a few very specific exceptions. So let's say that you're a listed company in Sri Lanka, you can invest up to USD 500,000 in shares of foreign companies. That's possible. That is an exception. Let's say that you are an unlisted company in Sri Lanka, your cap is USD 150,000 or 20% of your net asset, whichever is lower. If you have got foreign currency loans from overseas, you can use those funds for the investment, but only if they are approved. And you can invest USD 100,000 to set up a new overseas office. Let's say that you are going to start an office somewhere. You can use $100,000 to the setup and USD 30,000 more to support or maintain an existing one. Let's say that you need to buy the equipment or the necessary things, then you can use another 30,000 USD. And of course, the licensed banks, they are allowed to invest in their overseas operations freely. So the reason behind all of this, you might be wondering, the thing is central bank is strictly trying to prevent the capital flight. They want to stop large sums of money leaving out of the country. And they want to ensure that we retain enough foreign currency inside Sri Lanka to stay stable. And now we are having the limits on foreign currency accounts. Even if you are not investing abroad, your ability to use foreign currency is now limited, not like before, whether you are a business or an individual. Let's start with the BFCA, or as business foreign currency account. Business can now only use up to 200,000 USD for the outward capital transaction. Let's say that you are paying for your investment or for a loan or certain expenses overseas. For individual, it has become even tighter. Let's say for that, we call it as PFCA, or as personal foreign currency account. It allows you to use only up to USD 20,000 for the outward capital movements. They are not just arbitrary numbers. They are designed to control the amount of money flowing out of the country. So let's say that we are having economic crisis, especially when the foreign reserves are fragile. These kinds of controls are essential for a country. So the government's goal is to manage the liquidity simply to avoid the currency crisis and to maintain the investor confidence throughout the time. So yes, at the moment you may feel very restrictive, but it's all part of a bigger plan to rebuild the economy from the inside out. Now, here there is a little bit of flexibility, but only for the special cases. Let's say that your company or investment plan needs to go beyond those limits. For an example, we just talk. So here, more than USD 200,000 for a business or 20,000 USD as an individual. Can you still do it? Let's say that you are a business, but you want to send more than USD 100,000, or let's say USD 200,000 is the requirement. You need to send as a businessman. Or else, let's say as an individual, you want to send more than USD 20,000. Can you still do it? Yes, of course. But only if the central bank approves it, and only under the very restrict conditions. So let's say if your investment is fully funded by the foreign loans from non-residents, so it's not pulling off the Sri Lankan reserves. In that case, we can do it. But still, you have to get the case-by-case approval from the Central Bank of Sri Lanka. If the investment is legally required by a foreign regulator, like if you already have a company overseas and you need to meet new regulations there, yes, you get the chance to do this. If you are a licensed bank making the legitimate overseas bank related investment, like let's say that you want to open or you want to expand your branches, yes, you can do. So these case-by-case approvals are like pressure valves. They allow some flexibility, but in a tightly monitored way. So if you are planning to go big, you will need the documentation, patience, and probably the legal and the financial advice to get through the process. So please make sure that you plan everything before you do something. And the next thing is, we are going to talk about the specialized investment account plus the inward investment account. This might be a bit new for you. So there are two special accounts designed for the non-residents, and there are some eligible residents for these two. The specialized investment account, or as we call it as SIA, right? It's the first one. This is a foreign currency account made specially or specifically for the investment into Sri Lanka. Like let's say that you are going to buy a government security or the unit trust or even the company shares. So here, any money in the SIA must follow all the updated Forex and the remittances rule. You can't avoid that. If you want to send money back out, let's say that you want to repatriate the profits, it must fall within the migration or the investment caps that we have talked about earlier. Every transaction through the SIA, it must be reported to the central bank. So while this account is designed to make it easier for the foreign investors or the diaspora investors to bring their money inside the country, it also ensures the full compliance and the transparency in this regard. So when it comes to inward investment account, let's say IIA, this one is in Sri Lankan rupees, and it's also meant for the non-residents or the certain approved residents who want to invest locally. So if you're a foreign investor or part of the Sri Lankan diaspora, and let's say that you are buying property, stocks, or starting a business in Sri Lanka, your funds will likely flow through an IIA, or as we call it as inward investment account. So if you later want to send your earnings or capital gains back out, still you have to use this. So you have to follow the new outward remittance caps, as I have mentioned earlier, very clearly, and provide the proper documentation and reporting. And also you have to make sure you cannot use IIA or the inward investment account to bypass the outward investment suspension at any time. Then we are coming to the integration with compliance and the monitoring. Here, banks are on the front lines here when it comes to the compliance and the monitoring. They are required to monitor all the outward remittances, whether you are repatriating profits or sending dividends or cashing out of investment. Every transaction from SIA or IIA, it has to be reviewed for compliance with the new rules. And it should be recorded and reported through the EPMS. What do you mean by EPMS? Export Proceeds Monitoring System. So this tighter integration, it helps the government protect the foreign exchange reserve, and it prevents the illegal capital flight and maintain the trust in the system. It's not about discouraging the investment. They are trying to be responsible and traceable about the financial movement. Now we are going to discuss about the CTRA, or as we are going to specifically discuss about the inheritance transfers, or as we call it as capital transaction rupee account. First, we have discussed about the IIA, SIA, now CTRA. So let's switch gears to a different kind of account. We call this as a capital transaction rupee account, simply CTRA. This is specifically for the Sri Lankan living overseas, simply the non-resident. They have inherited money, land, or property in Sri Lanka. Let's say that's you, and you want to send your inherited funds abroad. So, what is the account that you have to open? It's a CTRA. So, I will explain it how it works. So, all inherited money or sales proceed from inherited assets must go into this account. You don't have any other channel. You can only remit USD 30,000 per year from CTRA. You can see that there is also a cap. So if your inheritance is large, it could take years to transfer the full amount. This limit is meant to prevent the sudden outflows that could hurt the foreign currency reserves. So the rules are defined by the Gazette number 2391/01, and banks are expected to apply them consistently. It's a must. So if you are overseas and planning to deal with an inheritance that you have here, make sure that you start early. You have to understand the limits and coordinate closely with your bank. No shortcuts are here. So it's a slow but safer process that you have to follow. So now we are going to see the rules for the Sri Lankan migrants sending money. So here you can send money out of the country, especially those moving abroad for work, study, or permanent residence. First time migration allowance. If you are leaving Sri Lanka permanently, you can send up to 100,000 USD once at the first stage. This covers things like, for the settling, for the housing, and for your initial expenses. But you will need to show the proof, like the visa, university acceptance letter, or the job contract. And importantly, the money must be sent through the capital transaction rupee account. And there is no shortcuts again. And then the annual allowance, after that, you are allowed to send up to USD 20,000 per year for ongoing expenses. Like, let's say that for your tuition fees, for your rent, or for your healthcare abroad, you can use it. And there are some recent changes. These rules were actually posed in 2020 during the foreign exchange crisis. So people were not allowed to send money freely. You remember that people were struggling during this time. They were reintroduced in 2023, but now with more checks and monitoring to ensure the stability. And here we need to have the legal sources, and everything is monitored by the central bank and the finance ministry. This was backed by the Gazette number 2391/03. So always go through the legal channels using the Hawala or Undial or the other informal methods. You may feel it's very convenient, but they are illegal, and it always comes up with the serious risk, including the fines, blacklisting, maybe the worst cases. So let's say that you are bringing money into Sri Lanka. Yeah. So now let's say that you are bringing money in Sri Lanka. This is the golden rule that you have to follow. It must come through the official banking channels. If you are bringing money any other way, let's say that you are smuggling cash, or you are using Hawala or deal method, or the unregistered transfer, it's completely non-compliant. So what happens if your money is already in the country but came informally? The legally send it back up. You will need to know. You have to provide the proof of the source, how you have got this. You can show inheritance documents, pay slips, or the sale reports. You can submit that to your license bank, who will assess and approve only if it is legitimate. If you can't prove the funds, your source of funds, your bank is required to report it to the Financial Intelligence Unit, FIU. And that could lead to an investigation for money laundering or the illegal capital movement, which will be having so many bad consequences on your way. So here's the safe route that you can do. Use an IIA, or as inward investment account, for the rupee-based foreign investment. SIA, or the specialized investment account, can be used for the foreign currency-based investment. So these accounts are legal, fully legal, and it's transparent. And it makes sure that your money is protected throughout the time period. So if you want to move money in and potential back out again, use this system. I understand it's slower, but still it's safe. And now we are going to discuss about something very new that you all will be interested, the Port City Collapse. It was a hot topic. So as investors, there are some certain things that you should know. So Port City Colombo, this is Sri Lanka's bold bet on the future. You all might be agreeing with me. So this is a special economic zone built right next to Colombo. And their main aim is to attract the global investment and the businesses to Sri Lanka. Why this is very special? Because it's governed by its own legislation. We have a Port City Commission Act number 11 of 2021. So that is specifically for that. Eventually, it will operate with its own legal tax and banking system and truly independent from the rest of the country. You remember that on that time, people were telling, okay, they are going to make a separate area. Like you should understand the concept properly. So that will be having non-legal tax and the banking system, which is independent from the rest of the country, but it's part of the country. So it's been positioned as a financial and services hub. You can see that these things are very natural, very common in Dubai and Singapore. Right now, through the usual Sri Lankan foreign exchange rules, these foreign forex rules are still applied to the Port City Colombo, including the limitations and reporting requirements, what we have just talked about. But the plan is to introduce special rules for the Port City investors as the special economic zone matures. So investors, they use dedicated Port City investor accounts, not regular the commercial accounts that they have used. This is very much tailored to the handling the foreign inflows. So why does this matter? Because clear, consistent, and trustworthy investment rules are critical when in order to make the port city succeed. It's not just about fancy buildings. It's about creating an environment where capital can flow in and out transparently and efficiently. So for those who look into the future, this is a space to watch. And now we are coming to the cryptocurrencies in Sri Lanka. So many Gen Zs or the Generation Z or our teenage people, they are into cryptocurrencies in Sri Lanka. So these are the basic things that you need to know. So Bitcoin, Ethereum, the whole digital asset world, cryptocurrency. Globally, it's booming. But in Sri Lanka, what we are doing, we are still trying to figuring it out. Right now, cryptocurrencies are not regulated under the current Foreign Exchange Act. That means there are no specific rules, no license, and no protections for this. If you are using crypto to move money in or out of the Sri Lanka, you are still bound by the Forex rules. That means you also should declare the source of funds. You must use the official banking channels for any conversions or cross-border transfers. So no, you can't use crypto to bypass migration caps or the investment restrictions. The government is working on a legal framework currently, as mentioned in the above Gazette number 2391/01, but it's not ready yet. We all know that. Until then, you have to play it safe, report everything properly to the certain institutions, because even though crypto is decentralized, your money is still tied to the real world laws. So next, we are coming to the NPP's vision of diaspora engagement. I will quickly go through this. So here, the National People's Power, the NPP vision for working with the Sri Lankan diaspora, they are encouraging them. So they are pushing for a pro-development, inclusive and structured engagement strategy. So what they are trying to do, they are trying to move the Foreign Employment Bureau under the Foreign Ministry, because that will improve the coordination and the migrant protection. Otherwise, you have to go here and there is no proper structure that we have to follow. And this voting rights abroad, they have promised that they are enabling the Sri Lankans living overseas to vote in national elections through the legislative reform and the election commission plan. And then the diaspora pension schemes, they are going to do this via the bilateral agreements. They are going to provide the voluntary pensions for the returning low-income migrant workers. So they want to get into the bilateral agreements with the certain companies, with the certain countries in this regard. And they are going to establish a diaspora entrepreneur unit. They are trying to help the returning migrants to set up their own small businesses with credit access and the legal help. So that shift in the remittances from consumption to the productive investment for a country. And in the banking reform, they are introducing a lower remittance cost and they are offering the multi-currency accounts and make it easier for the diaspora to join the formal financial system. And they are having the embassy-led diaspora forums. They are using the embassies to host regular policy discussions and resolve the diaspora concerns. They are having a strategic diaspora vision. So they consider the diaspora as the development partners not just the remittance machine. I think that's a very good thing because that will help them to be included when we are shaping our economic policy. So they may feel valued, they may feel that they are heard. And then tackling the informal remittances, they offer better rates and the digital tools to move people away from the informal remittances towards the formal remittances. So they have simplified the investment rules. They have cut the red tape between the CBSL, Board of Investment, and the Inland Revenue Department, and they have set up support desk for the diaspora investors. So they are working on this, and they have promised that they are going to give these things. So bottom line, you can see that it's a holistic strategy. It's not just about the money, but trust, dignity, and the inclusion for our diaspora people. And I will be quickly go through the key challenges in the diaspora engagement, even though we say that, okay, there are certain policies that they are ready to implement, but of course, it's not all smooth sailing. So there are certain main challenges. You know that informal remittances channels are here. What we can do is we can make formal channels more competitive, more accessible to the people. We can make it digitalized. And there should be a regulatory complexity. Investors face confusing and overlapping rules across the certain institution. So what we can do is we can simplify the process and we can create the diaspora help desk. And we can see that weak return reintegration, like when the return is when the people come back to Sri Lanka, the skill mismatch is there, and they are not having the support, and there are only few job options to get in. So we can create reskilling programs, and then we can recognize the foreign qualifications and give the validity for that. And brain drain, as Hoshin has already mentioned, especially in the tech and health, skilled professionals, they leave for a better pay. And what we can do, we can improve the local conditions, we can offer re-entry pathways, we can, or the remote skill transfers is something that we can do. And the crypto uncertainty, as I have mentioned, yes, we must develop a regulated crypto and fintech framework to Sri Lanka. And so if we want the diaspora to engage long term, we have got to fix these issues at the root. Otherwise, it won't be laying a proper foundation to our diaspora engagement. So with that, we have come to the final part of our session. So we have come up with some recommendations for the policy. We are going to wrap it up with some straightforward advice tailored to the different stakeholders. Let's say that you are an exporter. Make sure that you bring in your export income on time. Submit all your documents on time. Convert any leftover foreign currency as required and stay compliant to the law. That will avoid you from penalties and the disruptions. Investors and diaspora, before investing or sending money out, review the new limits. See, because every time CBSL or the Central Bank of Sri Lanka foreign exchange unit, they review the limits. They publish all the necessary details through the gazettes, directives, and then with the orders. So review the new limits. If you're unsure, get legal or financial advice, especially if you are trying to set up overseas branches or repatriate your profits. And let's say that you're coming from a licensed bank, upgrade your compliance and the reporting system in accordance with the CBSF framework. You have to train your staff on the new documentation procedures and make sure reports go to the CBSL on time. Let's say that simply you're a migrant. If you're planning to leave Sri Lanka or to send money abroad, make sure that you understand the new migration allowance and use the authorized dealers instead of the informal remittance infrastructure. At the end of the day, these changes are about the stability of the country, transparency, and smart planning for both individuals and the country. Thank you so much for the listening. And we have, as Hoshin and Mr. Roshan Madala has mentioned, you can buy this report. You're having a coupon. You can scan this QR code, and there is a coupon code as well, where you will be getting 50% off our report. And you can use this QR code and use our coupon code to purchase the report if you are interested. Thank you for listening, and it's time for the Q&A session. So if you have any questions, please do ask, and over to you. It's your time, and if you have any kind of thing that which is not very clear to you, please do ask. We are here to do the clarifications. We are here to help support you. So if you have any clarification to get it done, and if you want to ask about our report or anything, please do ask. It's your time. Yes, one of our audience person is asking about where we can get more info regarding the Central Bank of Sri Lanka updates or the gazettes or the orders. Yes, what you can do is you can go to the Central Bank of Sri Lanka website. They have a separate department called Department of Foreign Exchange. So once you get into this website or that particular platform, you can see that they have put all the gazettes, updated gazettes, and then the orders and the directives. So you can use that. Go to the CBS government.lk website and then go to the Department of Foreign Exchange. So with that, you can see. And yes. Yes, Mr. Mark, we have got your compliment as well as the question. Yes, you have understood it correctly. We are happy that you have got something out of our session. Thank you. Yes, we have another question. So, someone has asked, what's the first time migration allowance? Yes, if you are leaving Sri Lanka permanently, you can send out up to USD 100,000 at the first stage once. So let's say that for your settling in, housing, and the initial expenses. But here also you have to show the proof of funds, right? So proof of funds plus the proof like visa, university acceptance, or the job contract. And that also has to be sent through the capital transaction rupee account, CTRA. There is no shortcut for that again. Yes, someone has asked about the annual allowance after the first allowance or the thing. Once you send the USD 100,000, yes, you can allow to send up to USD 20,000 per year for the ongoing expenses. Let's say for your tuition fees, rents, and the healthcare bill. Yes, most of the people have directly messaged and asked about this. I think that is clear. People had the problem regarding the capped amount of money. Okay, some people have requested to send us the recording as well as the presentation. Yes, we will be sending it. But now we are putting our email address on the chat box. So please send a requesting email. Then we will be sharing the recording plus the presentation to you. We will be sharing our email address here in the chat box. Okay. Okay, the silence means that you don't have any things to be asked further. But we really hope that you have got something out of our presentation, out of our session. Thank you all for participating. Okay, if you have further questions, even you can send these questions to our email address info@riunit.com. So we will be helping you out with the necessary answers. Thank you so much for your time. Have a good day.